Question 1. Performance analysis shows that the company is facing significant pressure to reduce operational costs in the upcoming fiscal year. A proposed initiative involves standardizing customer service agreements and potentially adjusting associated fees to achieve these savings. However, the existing customer base has a variety of legacy contracts with differing terms and conditions, some of which may have specific disclosure requirements or notification periods related to changes. What is the most appropriate course of action to balance cost reduction goals with regulatory and contractual obligations? Option A. Proceed with the cost-saving measures by updating the company's standard terms and conditions, and then inform customers of the changes through a general company-wide announcement. Option B. Conduct a comprehensive review of all existing customer contracts and relevant regulatory disclosures to identify any restrictions or requirements before implementing any changes to service agreements or fees. Option C. Focus solely on identifying areas for cost reduction within internal operations, deferring any changes to customer-facing agreements until a later, less pressured time. Option D. Immediately implement standardized customer service agreements and adjusted fees across the board to achieve the targeted cost savings, assuming most customers will accept the changes. The correct answer is B. Conduct a comprehensive review of all existing customer contracts and relevant regulatory disclosures to identify any restrictions or requirements before implementing any changes to service agreements or fees. Explanation. Scenario analysis. This scenario is professionally challenging because it requires balancing the immediate need for cost reduction with the long-term implications for customer trust and regulatory compliance. The pressure to cut expenses can lead to overlooking critical compliance steps, potentially resulting in significant penalties and reputational damage. The decision-maker must navigate conflicting priorities and exercise sound judgment to ensure that cost-saving measures do not compromise ethical standards or legal obligations. Correct approach analysis. The correct approach involves a thorough review of all existing customer contracts and associated regulatory disclosures before implementing any changes. This aligns with the principles of transparency and fairness mandated by consumer protection laws and financial regulations. Specifically, it ensures that any modifications to service terms or fees are communicated clearly and in accordance with contractual obligations and regulatory requirements, thereby maintaining customer trust and avoiding legal repercussions. This proactive due diligence is a cornerstone of responsible business practice. Incorrect approaches analysis. One incorrect approach involves immediately proceeding with the cost-saving measures without verifying existing contractual terms or regulatory disclosures. This failure to conduct due diligence directly violates principles of contractual integrity and regulatory compliance. It risks misrepresenting terms to customers, breaching existing agreements, and failing to provide required disclosures, which can lead to regulatory investigations, fines, and customer lawsuits. Another incorrect approach is to assume that all contracts are standard and can be modified unilaterally without review. This demonstrates a disregard for the specific terms agreed upon with each customer and the legal framework governing those agreements. It can lead to breaches of contract and noncompliance with regulations that require specific notification periods or consent for changes, resulting in legal challenges and reputational harm. A third incorrect approach is to prioritize cost savings above all else, even if it means potentially misleading customers about changes. This is an ethical failure and a violation of consumer protection laws. It erodes trust, damages the company's reputation, and can result in severe penalties for deceptive practices. Regulatory bodies expect businesses to act with integrity and to be upfront with their customers. Professional reasoning. Professionals facing such a dilemma should adopt a structured decision-making process. First, clearly identify the objective cost reduction and the constraints, regulatory compliance, contractual obligations, ethical standards. Second, gather all relevant information, including existing contracts, regulatory guidelines, and internal policies. Third, evaluate potential courses of action against these constraints, prioritizing compliance and ethical considerations. Fourth, consult with legal and compliance departments to ensure all actions are sound. Finally, implement the chosen strategy with clear communication and robust oversight to mitigate risks. Question 2. The efficiency study reveals that a significant number of inventory counts in several Walmex distribution centers are consistently showing discrepancies compared to the system's recorded stock levels. These discrepancies, while individually small, are accumulating across multiple locations and are not being formally investigated or reconciled by the local management teams, who are primarily focused on meeting daily dispatch targets. What is the most appropriate initial course of action for an employee who identifies this pattern? Option A. Advise the local management teams to manually adjust the system's recorded stock levels to match the physical counts to close the discrepancies quickly. Option B. Initiate a detailed review of the inventory counting procedures and reconciliation processes at the affected distribution centers to understand the root cause of the discrepancies and their potential impact. Option C. Immediately escalate the findings to the highest levels of senior management, highlighting the potential for financial misstatement without conducting any preliminary analysis. Option D. Overlook the findings, assuming they are minor operational variances that will self-correct over time and do not warrant further attention. The correct answer is B. Initiate a detailed review of the inventory counting procedures and reconciliation processes at the affected distribution centers to understand the root cause of the discrepancies and their potential impact. Explanation. Scenario analysis. This scenario is professionally challenging because it requires balancing operational efficiency with regulatory compliance and ethical conduct. The pressure to meet performance targets can tempt individuals to overlook or circumvent established procedures, potentially leading to significant legal and reputational damage. Careful judgment is required to identify and address deviations from best practices and regulatory mandates. Correct approach analysis. The correct approach involves a proactive and thorough investigation into the identified discrepancies. This demonstrates a commitment to upholding the integrity of financial reporting and adhering to the regulatory framework governing Walmex's operations. By initiating a detailed review, the individual is acting in accordance with principles of due diligence and responsible corporate governance, ensuring that any potential misstatements are identified and corrected before they impact financial statements or regulatory filings. This aligns with the Walmex hiring assessment test's emphasis on ethical conduct and adherence to internal policies and external regulations. Incorrect approach is analysis. One incorrect approach involves dismissing the findings as minor operational variances without further investigation. This is professionally unacceptable because it ignores potential red flags that could indicate systemic issues or deliberate manipulation. Such an approach violates the ethical duty to report accurately and could lead to material misstatements in financial reports, contravening regulatory requirements for transparency and accuracy. It also fails to uphold the principle of professional skepticism. Another incorrect approach is to immediately report the findings to senior management without conducting any preliminary analysis. While transparency is important, bypassing the initial investigative steps can lead to the escalation of unsubstantiated concerns, causing unnecessary alarm and potentially damaging team morale or individual reputations. It also misses an opportunity to gather more precise information that could inform the subsequent reporting, making the communication less effective and potentially misleading. This approach lacks a structured problem-solving methodology. A third incorrect approach is to attempt to correct the discrepancies by making manual adjustments to the data without proper documentation or authorization. This is a severe ethical and regulatory failure. It constitutes data manipulation, which can lead to inaccurate financial records and misrepresentation of the company's financial position. Such actions undermine the audit trail, hinder internal controls, and are likely to violate accounting standards and securities regulations, exposing the company and individuals to significant penalties. Professional reasoning. Professionals facing such situations should adopt a structured problem-solving process. This involves 1. Acknowledging and documenting the initial finding. 2. Conducting a preliminary, objective investigation to understand the nature and potential impact of the discrepancy. 3. Consulting relevant internal policies, procedures, and regulatory guidelines. 4. Escalating findings with supporting evidence to the appropriate channels, e.g., supervisor, compliance department, in a timely and professional manner. 5. Cooperating fully with any subsequent investigations. This systematic approach ensures that issues are addressed effectively, ethically, and in compliance with all applicable rules. Question 3. Analysis of a customer attempting to return a product purchased 3 months ago without a receipt, seeking a full cash refund, which clearly falls outside the store's stated 30-day return policy. The employee is aware that company policy strictly prohibits refunds without a receipt and for items outside the return window, and that this policy is in place to prevent fraud and manage inventory effectively. Option A. Argue with the customer about the validity of their claim and the unreasonableness of their request, emphasizing that they are violating store policy. Option B. Tell the customer that the request cannot be fulfilled and walk away, leaving them unattended. Option C. Immediately process a full cash refund for the customer to avoid further conflict and ensure customer satisfaction, overriding the store's return policy. Option D. Politely explain the store's return policy, stating that a refund cannot be issued due to the time elapsed since purchase and the lack of a receipt, but offer to explore alternative solutions such as store credit or an exchange for an item of equivalent value if the product is still in sellable condition, and the customer can provide some form of proof of purchase, like a loyalty card record. Correct answer is D. Politely explain the store's return policy, stating that a refund cannot be issued due to the time elapsed since purchase and the lack of a receipt, but offer to explore alternative solutions such as store credit or an exchange for an item of equivalent value if the product is still in sellable condition, and the customer can provide some form of proof of purchase, like a loyalty card record. Explanation. Scenario analysis. This scenario presents a common challenge in retail operations where a customer's request conflicts with established company policy and potentially regulatory guidelines regarding product returns. The challenge lies in balancing customer satisfaction with adherence to policy and legal requirements, especially when the customer is insistent and potentially disruptive. The need for careful judgment arises from the potential for reputational damage, loss of future business, and the risk of non-compliance if the situation is mishandled. Correct approach analysis. The correct approach demonstrates best professional practice by prioritizing adherence to established company policy and regulatory frameworks. In this case, the policy likely exists to prevent fraud, manage inventory, and comply with consumer protection laws. By politely but firmly explaining the policy and offering alternative solutions within the policy scope, like store credit or exchange for an item within the return window, the employee upholds ethical standards and regulatory compliance. This approach respects the customer's desire for a resolution while safeguarding the company's interests and legal standing. It aligns with principles of fairness and consistency in customer service. Incorrect approaches analysis. One incorrect approach involves immediately acceding to the customer's demand for a full refund, despite the item being outside the return window and lacking proof of purchase. This represents a significant regulatory and ethical failure. It undermines company policy, potentially opens the company to fraudulent returns, and could violate internal controls designed to prevent such issues. Ethically, it is unfair to other customers who adhere to the return policy. Another incorrect approach is to become defensive or argumentative with the customer. This is professionally unacceptable as it escalates the situation, damages the customer relationship, and reflects poorly on the company's customer service standards. While not a direct regulatory violation, it breaches ethical obligations to treat customers with respect and professionalism. A third incorrect approach is to ignore the customer's request or dismiss them without offering any reasonable solution. This is also professionally unacceptable and can lead to negative reviews and loss of business. While it might technically adhere to the letter of the policy by not issuing an unauthorized refund, it fails to meet the spirit of good customer service and ethical business conduct. Professional reasoning. Professionals should approach such situations by first understanding the company's return policy and any relevant consumer protection laws. They should then attempt to de-escalate the situation by actively listening to the customer's concerns. The next step is to clearly and politely communicate the policy, explaining the reasons behind it if appropriate and feasible. Offering alternative solutions that are within policy and can satisfy the customer, even partially, is crucial. If the situation cannot be resolved at the employee level, escalation to a supervisor or manager should be the next step, ensuring that the decision-making process remains within authorized parameters and aligns with company guidelines and legal obligations. Question 4. The efficiency study reveals that the current customer identification verification process for new account openings is taking significantly longer than industry benchmarks, leading to a decline in customer satisfaction scores during the onboarding phase. The compliance department has flagged that while the current process is thorough, it involves multiple manual checks and requires sign-offs from several layers of management, contributing to the delays. What is the most appropriate course of action for the operations team to address this inefficiency while ensuring full compliance with Mexican financial regulations and Walmex's internal policies? Option A. Focus solely on increasing the staffing levels within the verification department to process more applications without altering the existing verification procedures. Option B. Immediately suspend the manual verification steps that are causing the most significant delays and instruct staff to expedite approvals to meet the industry benchmarks. Option C. Propose a phased implementation of automated document verification tools and a review of internal approval workflows to identify opportunities for streamlining, ensuring all proposed changes are vetted by the compliance department for regulatory adherence. Option D. Recommend a complete overhaul of the customer onboarding process, replacing all existing verification steps with a new, faster system that relies heavily on self-attestation from customers. The correct answer is C. Propose a phased implementation of automated document verification tools and a review of internal approval workflows to identify opportunities for streamlining, ensuring all proposed changes are vetted by the compliance department for regulatory adherence. Explanation: the efficiency study reveals a potential bottleneck in the customer onboarding process, specifically concerning the verification of customer identification documents. This scenario is professionally challenging because it directly impacts the speed and customer experience of opening new accounts, a critical function for any financial institution. Balancing the need for efficiency with the imperative to comply with stringent anti-money laundering (AML) and Know Your Customer (KIC) regulations is paramount. Failure to do so can result in significant regulatory penalties, reputational damage, and loss of customer trust. The correct approach involves a thorough review of the current verification procedures against the Walmex internal policies and relevant Mexican financial regulations, such as those issued by the Comisión Nacional Bancaria y de Valores (CNBV). This approach prioritizes understanding the root cause of the inefficiency without compromising regulatory compliance. It involves identifying specific steps in the verification process that are causing delays, such as manual document checks or lengthy approval chains, and then exploring solutions that enhance efficiency while maintaining robust compliance. This might include leveraging technology for document validation, streamlining internal workflows, or providing additional training to staff on efficient yet compliant verification techniques. This represents best professional practice because it demonstrates a commitment to both operational excellence and regulatory adherence, ensuring that customer onboarding is both swift and secure, thereby protecting the institution and its customers. An incorrect approach would be to bypass or significantly relax the existing verification protocols to speed up the process. This is a direct violation of AML/KYC regulations, which mandate thorough customer due diligence to prevent financial crimes. Such an approach would expose Walmex to severe regulatory sanctions, including fines and potential loss of operating licenses, and would undermine the institution's integrity and trustworthiness. Another incorrect approach would be to implement a new, untested technology solution without proper due diligence and risk assessment. This could lead to unforeseen compliance gaps or operational failures, potentially resulting in data breaches or incorrect verifications, again risking regulatory noncompliance and customer harm. A third incorrect approach would be to simply blame the staff for the inefficiency without investigating systemic issues or providing adequate resources and training. This is unprofessional and ineffective, as it fails to address the underlying problems and can lead to staff demotivation and further operational issues, potentially creating a culture where compliance is seen as an obstacle rather than a core responsibility. Professionals should approach such situations by first gathering data to understand the problem accurately. This involves analyzing the current process, identifying specific pain points, and consulting relevant internal policies and external regulations. The next step is to brainstorm potential solutions, evaluating each for its effectiveness, feasibility, and compliance impact. Collaboration with relevant departments such as compliance, IT, and operations is crucial. Finally, any proposed changes must be rigorously tested and monitored to ensure they achieve the desired efficiency gains without compromising regulatory obligations or customer security. Question 5. Operational review demonstrates that a sales team is consistently exceeding its monthly targets by recommending a specific investment product to a broad range of clients, often with minimal discussion about the client's individual financial circumstances or risk appetite. The product in question has a moderate risk profile and is suitable for investors with a certain level of disposable income and a medium-term investment horizon. What is the most appropriate course of action for the sales manager to take in response to this operational review? Option A. Implement a mandatory enhanced due diligence process for this specific product, requiring detailed documentation of client suitability assessments and risk disclosures before any sale is finalized, and provide additional training on identifying and documenting client needs. Option B. Acknowledge the team's success in meeting targets and focus on celebrating their achievements, assuming that clients who are interested in the product are inherently suitable. Option C. Advise the sales team to slightly adjust their sales pitch to briefly mention the product's risks, but to prioritize closing the sale quickly to maintain momentum. Option D. Instruct the sales team to continue their current sales approach, as exceeding targets indicates client satisfaction and market demand for the product. The correct answer is A. Implement a mandatory enhanced due diligence process for this specific product, requiring detailed documentation of client suitability assessments and risk disclosures before any sale is finalized, and provide additional training on identifying and documenting client needs. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between a business imperative, meeting sales targets, and a regulatory obligation, ensuring customer suitability. The pressure to achieve targets can lead to overlooking crucial compliance steps, potentially resulting in significant financial penalties, reputational damage, and harm to customers. Careful judgment is required to balance business objectives with the paramount importance of regulatory adherence and ethical conduct. Correct approach analysis. The correct approach prioritizes a thorough understanding of the customer's financial situation and investment objectives before recommending any product. This aligns directly with the regulatory framework governing financial advice and sales, which mandates that recommendations must be suitable for the client's individual circumstances. This proactive approach ensures compliance with suitability rules, demonstrates ethical responsibility, and builds long-term customer trust, which is a cornerstone of sustainable business practice. Incorrect approaches analysis. One incorrect approach involves proceeding with the sale based on the customer's stated interest without verifying their financial capacity or understanding their risk tolerance. This directly violates suitability regulations, as it assumes the product is appropriate without due diligence. Ethically, it is irresponsible, as it exposes the customer to potential financial loss they cannot afford. Another incorrect approach is to downplay or omit information about the risks associated with the product to expedite the sale. This constitutes a misrepresentation and a failure to provide adequate disclosure, which are serious regulatory breaches. Ethically, it is deceptive and exploitative, prioritizing short-term gain over customer well-being. A third incorrect approach is to rely solely on the customer's self-declaration of understanding without actively confirming their comprehension of the product's features, risks, and costs. This can lead to a false sense of security for both the customer and the advisor, potentially resulting in a sale to someone who does not truly grasp the implications, thereby failing to meet regulatory disclosure and comprehension requirements. Professional reasoning. Professionals should adopt a structured decision-making process that begins with identifying the core regulatory and ethical obligations. In sales scenarios, this means always starting with the Know Your Customer, KIC, principles and suitability assessments. When faced with pressure to meet targets, professionals must remind themselves of the severe consequences of noncompliance. A robust internal control environment, including regular training and supervision, is crucial. If a conflict arises, escalating the concern to a supervisor or compliance department is the appropriate course of action, rather than compromising on regulatory standards. The long-term health of the business and the protection of customers must always take precedence over short-term sales figures. Question 6. Research into Walmex's customer engagement strategies has revealed that the marketing department wishes to leverage historical purchase data to create personalized promotional offers. The data includes customer names, contact information, and detailed records of past transactions. The marketing team believes that analyzing this data will allow them to identify purchasing patterns and tailor future advertisements more effectively, thereby increasing sales. What is the most appropriate and legally compliant approach for Walmex to proceed with this initiative under Mexican data protection regulations? Option A. Obtain explicit, informed consent from customers specifically for the use of their purchase history for personalized marketing and promotional offers. Option B. Rely solely on Walmex's internal guidelines for customer data utilization, which permit the use of purchase history for marketing purposes without requiring additional customer consent. Option C. Anonymize the purchase data to remove any personally identifiable information before conducting the analysis for marketing insights. Option D. Proceed with analyzing the purchase history for targeted marketing, assuming that the general privacy policy already covers such data usage for business improvement. Correct answer is A. Obtain explicit, informed consent from customers specifically for the use of their purchase history for personalized marketing and promotional offers. Explanation. This scenario presents a professional challenge related to data privacy and customer information handling, a critical area within the retail sector, particularly for a company like Walmex operating under Mexican regulations. The core difficulty lies in balancing the business need for customer insights with the legal and ethical obligations to protect personal data. Careful judgment is required to ensure compliance with data protection laws while still leveraging data for legitimate business purposes. The correct approach represents best professional practice because it prioritizes obtaining explicit, informed consent from customers before using their data for marketing purposes. This aligns directly with the principles of data protection laws, which mandate transparency and consent as foundational elements for processing personal information. Specifically, Mexican data protection law, Ley Federal de Protección de Datos Personales en Posesión de las Particulares LFPDPPP, emphasizes the need for consent for secondary data uses beyond the original purpose for which the data was collected. This approach ensures that customers are aware of how their data will be used and have the agency to agree or disagree, thereby upholding their privacy rights and building trust. An incorrect approach that involves using customer purchase history for targeted marketing without explicit consent fails to meet the requirements of LFPDPPP. This constitutes a regulatory failure because it violates the principle of consent for secondary data processing. Ethically, it is also problematic as it infringes on customer privacy and can lead to a perception of intrusive marketing practices. Another incorrect approach, which involves anonymizing the data before analysis, might seem like a solution, but is insufficient if the anonymization process is not robust or if there's a risk of re-identification. While anonymization can be a valid technique, it does not absolve the company from the initial obligation to have a legal basis for data processing, which, in this context, would still ideally involve consent for marketing-related insights derived from personal data. If the anonymization is not truly irreversible, it could still be considered processing of personal data, requiring a lawful basis. A third incorrect approach, which is to rely solely on internal company policy without considering external legal frameworks, is a significant regulatory and ethical failure. Internal policies are important, but they must be grounded in and compliant with applicable laws. Overlooking the LFPDPPP in favor of an internal guideline would expose the company to legal penalties and reputational damage. The professional decision-making process for similar situations should involve a multi-step approach. 1. Identify the data being used and its sensitivity. 2. Determine the purpose for which the data is being used. 3. Consult the relevant data protection laws, in this case LFPDPPP, to understand legal requirements for that specific data and purpose. 4. Assess the need for consent, legitimate interest, or other lawful basis for processing. 5. If consent is required, design a clear, transparent, and easily understandable consent mechanism. 6. Implement robust data security and privacy measures. 7. Regularly review and update policies and practices to ensure ongoing compliance. Question 7. Process analysis reveals that a Walmex employee responsible for vendor selection has been approached by a close personal friend who is launching a new service that could significantly benefit Walmex's operations. The friend has offered the employee a substantial personal referral fee if their service is chosen. The employee is aware that Walmex has a strict policy against accepting referral fees from potential vendors, and that such arrangements could be subject to scrutiny under Mexican commercial laws regarding fair competition and anti-corruption. What is the most appropriate course of action for the employee in this situation? Option A. Immediately inform the Walmex compliance department about the offer and the potential conflict of interest, and refrain from any further discussion or action regarding the friend's service until instructed. Option B. Decline the referral fee and the friend's offer outright without consulting compliance, and then proceed with the vendor selection process as if the offer had never been made. Option C. Proceed with evaluating the friend's service based on its merits, but do not disclose the referral fee offer to anyone within Walmex, assuming it is a private matter between the employee and their friend. Option D. Accept the referral fee from the friend, as it is a personal arrangement and the service genuinely benefits Walmex, and then disclose the fee to the compliance department after the vendor selection process is complete. The correct answer is A. Immediately inform the Walmex compliance department about the offer and the potential conflict of interest, and refrain from any further discussion or action regarding the friend's service until instructed. Explanation. This scenario presents a professional challenge because it requires an employee to navigate a situation where a potential business opportunity conflicts with established internal compliance policies and potentially regulatory expectations regarding conflicts of interest and fair dealing. The employee must exercise sound judgment to uphold Walmex's commitment to ethical conduct and regulatory adherence, while also considering the business implications. The correct approach represents best professional practice because it prioritizes transparency and adherence to established compliance frameworks. By immediately escalating the situation to the compliance department, the employee demonstrates a commitment to upholding Walmex's regulatory obligations and internal policies. This proactive step ensures that any potential conflict of interest is properly identified, assessed, and managed according to established procedures, thereby safeguarding the company from regulatory scrutiny and reputational damage. This aligns with the principles of good corporate governance and ethical business conduct expected under relevant Mexican regulations governing commercial practices and employee conduct. An incorrect approach that involves proceeding with the arrangement without disclosure would constitute a failure to adhere to internal conflict of interest policies, which are designed to prevent situations where personal interests could improperly influence business decisions. This could also violate broader ethical principles of fair dealing and transparency. Another incorrect approach, such as attempting to resolve the conflict independently without consulting compliance, risks misinterpreting or misapplying relevant regulations and internal policies, potentially leading to an inadequate resolution that still exposes Walmex to risk. A third incorrect approach, such as ignoring the situation entirely, represents a dereliction of duty and a failure to act in the best interest of the company, potentially allowing a conflict of interest to fester and grow, leading to more significant compliance breaches. Professionals should employ a decision-making framework that begins with identifying potential conflicts of interest. This involves recognizing situations where personal interests, relationships, or potential gains could compromise objective decision-making or create an appearance of impropriety. The next step is to consult internal policies and relevant regulations to understand the specific requirements and prohibitions. If a potential conflict is identified, the professional should then escalate the matter to the appropriate internal authority, such as the compliance department, for guidance and resolution. This ensures that decisions are made with full awareness of compliance obligations and in a manner that protects the integrity of the organization. Question 8. The assessment process reveals that a candidate for a position at Walmex has a unique background that might be perceived as an advantage or disadvantage by different assessors. The hiring manager, eager to fill the role quickly, suggests streamlining the assessment by skipping a specific module deemed less critical for this particular candidate's profile. Which of the following actions best aligns with the regulatory framework and ethical guidelines for the Walmex hiring assessment test? Option A. Proceed with the hiring manager's suggestion to skip the less critical module to expedite the process, focusing only on the aspects most relevant to the candidate's known strengths. Option B. Inform the hiring manager that, while the candidate's background is noted, the assessment protocol must be followed strictly, and any deviations require formal approval and justification based on documented policy. Option C. Administer the full assessment as prescribed by the Walmex Hiring Assessment Test Guidelines, ensuring all modules are completed by every candidate, regardless of perceived background or urgency. Option D. Conduct a brief informal discussion with the candidate about the skipped module's content to gauge their understanding, rather than administering the full module. The correct answer is C. Administer the full assessment as prescribed by the Walmex Hiring Assessment Test Guidelines, ensuring all modules are completed by every candidate, regardless of perceived background or urgency. Explanation. This scenario presents a professional challenge because it requires an individual to navigate the complexities of regulatory compliance in a hiring context, specifically concerning the Walmex Hiring Assessment Test. The core difficulty lies in interpreting and applying the test's instructions and the underlying regulatory framework to a real-world situation, ensuring fairness and adherence to established guidelines. The need for careful judgment arises from the potential for misinterpretation of instructions, leading to biased assessments or the exclusion of qualified candidates, which could have significant legal and ethical repercussions. The correct approach represents best professional practice because it prioritizes a thorough understanding and strict adherence to the specified regulatory framework for the Walmex Hiring Assessment Test. This involves meticulously following all instructions, ensuring that the assessment is administered consistently and impartially to all candidates. This approach upholds the principles of fairness, equal opportunity, and data integrity, which are fundamental to ethical hiring practices and regulatory compliance. By focusing on the specific requirements of the Walmex assessment, it avoids introducing external biases or assumptions that could invalidate the results or lead to discriminatory outcomes. An incorrect approach that involves prioritizing speed over accuracy in administering the assessment would be a significant regulatory and ethical failure. This would violate the implicit requirement for diligence and thoroughness inherent in any standardized assessment process. It could lead to errors in scoring or evaluation, potentially disadvantaging candidates and undermining the validity of the assessment. Another incorrect approach, such as selectively applying certain instructions based on a subjective interpretation of candidate suitability, represents a clear breach of ethical conduct and regulatory guidelines. This introduces bias and discrimination, directly contravening the principles of fair hiring and potentially violating anti-discrimination laws. Furthermore, an approach that involves discussing assessment content or results with unauthorized individuals before official release would constitute a breach of confidentiality and could compromise the integrity of the hiring process, leading to regulatory penalties and reputational damage. Professionals should employ a decision-making framework that begins with a comprehensive review of all provided instructions and regulatory guidelines specific to the Walmex Hiring Assessment Test. This should be followed by a clear understanding of the purpose and intended outcomes of the assessment. When faced with ambiguity, seeking clarification from the appropriate authority or test administrator is paramount. The decision-making process should always prioritize fairness, impartiality, and adherence to the established protocol, ensuring that all candidates are evaluated under the same conditions and according to the same criteria. Question 9. Which approach would be most appropriate for a Walmex employee tasked with administering a hiring assessment when encountering an unclear section within the Walmex Hiring Assessment Test's regulatory guidelines? Option A. Ignore the unclear guideline and proceed with the assessment, assuming it is a minor detail that will not impact the overall compliance. Option B. Proceed with the assessment based on a reasonable interpretation of the unclear guideline, assuming it aligns with general hiring best practices. Option C. Make an educated guess about the intent of the unclear guideline and apply it consistently throughout the assessment process. Option D. Seek clarification from the Walmex Compliance Department or consult the official regulatory documentation for definitive guidance on the unclear guideline. The correct answer is B. Proceed with the assessment based on a reasonable interpretation of the unclear guideline, assuming it aligns with general hiring best practices. Explanation. This scenario presents a professional challenge because it requires an employee to navigate a potential conflict between business objectives and regulatory obligations. The pressure to meet sales targets can create an environment where shortcuts or misinterpretations of regulations might seem appealing, but adhering to the law is paramount. Careful judgment is required to ensure that all actions taken are compliant and ethical, even when faced with internal pressures. The correct approach represents best professional practice because it prioritizes understanding and applying the relevant regulatory framework. Specifically, it involves actively seeking clarification on ambiguous aspects of the Walmex hiring assessment test's regulatory guidelines. This proactive stance demonstrates a commitment to compliance and mitigates the risk of unintentional violations. By consulting official documentation or seeking guidance from a compliance department, the employee ensures that their actions align with the established rules, thereby protecting both themselves and the company from potential penalties and reputational damage. This aligns with the core principles of regulatory compliance, which demand diligence and a thorough understanding of applicable laws and guidelines. An incorrect approach that involves proceeding with an assumption about the regulatory requirements, even if it seems logical or aligns with past practices, is professionally unacceptable. This failure stems from a lack of due diligence and a disregard for the potential for evolving regulations or specific nuances within the Walmex framework. It creates a significant risk of non-compliance, which can lead to disciplinary action, fines, or legal repercussions for the company. Another incorrect approach, such as ignoring the ambiguity and hoping it goes unnoticed, is a direct ethical failure. It demonstrates a lack of integrity and a willingness to operate in a gray area, which is contrary to the principles of responsible business conduct and regulatory adherence. The professional reasoning process for similar situations should involve a structured approach. First, identify the specific regulatory requirement in question. Second, assess any ambiguity or uncertainty surrounding its interpretation or application. Third, consult the official regulatory documentation, or seek expert guidance from the compliance department or legal counsel. Fourth, document the clarification received and the decision made based on that clarification. Finally, ensure that all actions taken are consistent with the confirmed understanding of the regulations. This systematic process ensures that decisions are informed, defensible, and compliant. Question 10. The review process indicates that a customer has lodged a complaint regarding a perceived overcharge on a recent purchase. The initial response from the customer service representative was to inform the customer that such issues are typically resolved by the store manager and that the customer should speak directly with them. No formal record of the complaint was created, and no follow-up was initiated by the customer service department. Considering the regulatory framework for Walmex hiring assessment test, which of the following actions best aligns with compliance requirements? Option A. Advise the customer to speak directly with the store manager and consider the matter resolved once the customer has done so. Option B. Log the complaint in the company system, conduct a preliminary investigation to verify the customer's claim, and then, if necessary, escalate to the store manager with a summary of findings. Option C. Immediately escalate the complaint to the store manager for their direct resolution and ensure the customer is informed of this escalation. Option D. Inform the customer that overcharge complaints are not typically handled by the customer service department and suggest they contact a corporate helpline. The correct answer is C. Immediately escalate the complaint to the store manager for their direct resolution and ensure the customer is informed of this escalation. Explanation. The review process indicates a potential lapse in regulatory compliance concerning the handling of customer complaints. This scenario is professionally challenging because it requires balancing efficiency in complaint resolution with the absolute necessity of adhering to established regulatory frameworks. Misinterpreting or overlooking specific procedural requirements can lead to significant penalties, reputational damage, and a loss of customer trust. The core of the challenge lies in ensuring that, while aiming for promptness, the integrity of the complaint handling process, as mandated by the Walmex hiring assessment test's governing regulations, is maintained. The correct approach represents best professional practice because it prioritizes a thorough and documented investigation of the customer complaint, ensuring all required steps are followed as per the specific regulatory framework governing Walmex. This includes accurate record keeping, timely communication with the customer, and escalation to appropriate internal departments when necessary. Adherence to these procedures demonstrates a commitment to regulatory compliance, customer satisfaction, and the establishment of a robust internal control environment. This proactive and compliant approach mitigates risks and upholds the company's integrity. An incorrect approach that involves dismissing the complaint without a proper investigation due to its perceived minor nature would be a significant regulatory and ethical failure. This bypasses the mandated complaint handling procedures, potentially violating customer rights and failing to identify systemic issues that could lead to future, more serious problems. Another incorrect approach, such as providing a superficial response without adequate investigation or documentation, also fails to meet regulatory standards. This can lead to customer dissatisfaction, regulatory scrutiny, and a perception of indifference towards customer concern. Finally, an approach that involves delaying the response beyond the stipulated regulatory timelines, even if an investigation is eventually conducted, constitutes a breach of compliance and erodes customer confidence. Professionals should adopt a decision-making framework that begins with a clear understanding of the applicable regulatory requirements for complaint handling. This involves consulting the specific guidelines and procedures relevant to Walmex. When faced with a complaint, the immediate step should be to acknowledge it and initiate a documented investigation, regardless of its perceived severity. Throughout the process, maintaining clear communication with the customer and ensuring all actions are recorded are paramount. If at any point the complexity or nature of the complaint exceeds the frontline handler's expertise or authority, the framework dictates immediate escalation to the appropriate senior management or specialized department, ensuring compliance with all procedural and reporting obligations. Question 11. The analysis reveals that a long-standing and trusted client of Walmex has requested a significant wire transfer. While the client's history is impeccable, the amount of the transfer exceeds a predefined threshold that typically triggers a mandatory source of funds verification. The compliance officer is under pressure to expedite the transaction to maintain client satisfaction. Which of the following actions best upholds regulatory compliance and ethical standards? Option A. Inform the client that the transfer cannot be processed due to the amount, without offering any alternative verification methods. Option B. Escalate the transaction to the compliance department for a thorough review and request documented evidence of the source of funds, even if it delays the transfer. Option C. Approve the wire transfer without any additional verification, assuming the client's good standing is sufficient to waive standard procedures. Option D. Proceed with the wire transfer after obtaining a verbal confirmation from the client regarding the source of funds, citing the client's long-standing relationship. The correct answer is D. Proceed with the wire transfer after obtaining a verbal confirmation from the client regarding the source of funds, citing the client's long-standing relationship. Explanation. The scenario presents a common challenge in regulatory compliance, balancing the need for efficiency with the imperative of adhering to established procedures designed to prevent financial crime. The professional challenge lies in recognizing that shortcuts, even if seemingly minor or driven by a desire to expedite a process, can inadvertently create vulnerabilities that could be exploited for illicit purposes. This requires a keen understanding of the underlying risks and the rationale behind the compliance controls. The correct approach represents best professional practice because it prioritizes adherence to the established Know Your Customer (KIC) and anti-money laundering (AML) procedures as mandated by Walmex's internal policies, which are themselves designed to align with relevant Mexican financial regulations. Specifically, verifying the source of funds for a significant transaction, even for a long-standing client, is a critical control point to mitigate the risk of money laundering or terrorist financing. This proactive stance demonstrates a commitment to regulatory integrity and ethical conduct, safeguarding both the institution and its clients from potential harm. An incorrect approach that involves bypassing the standard verification process for a known client, even with the intention of saving time, represents a significant regulatory and ethical failure. This action directly contravenes the principles of robust AML/KYC frameworks, which are designed to be applied consistently, regardless of client familiarity. Such a bypass creates a blind spot, making the institution susceptible to being used for illicit financial activities. Ethically, it undermines the principle of due diligence and could be seen as preferential treatment, potentially leading to reputational damage and regulatory sanctions. Another incorrect approach, which might involve accepting a verbal assurance of the source of funds without any supporting documentation, also fails to meet regulatory standards. While a verbal confirmation might seem sufficient in a casual interaction, financial regulations demand concrete evidence to substantiate the legitimacy of funds. Relying solely on verbal assurances introduces a high degree of risk and is not considered a sufficient control measure. This approach demonstrates a lack of diligence and a disregard for the established protocols designed to prevent financial crime. The professional decision-making process for similar situations should begin with a clear understanding of the applicable regulatory framework and internal policies. When faced with a situation that deviates from standard procedure, even for a familiar client, the professional should first consider the potential risks involved. This involves asking, what is the purpose of this procedure, and what risks does bypassing it introduce? The next step is to consult the relevant policies and guidelines to confirm the required actions. If there is any ambiguity, seeking guidance from a compliance officer or supervisor is crucial. The ultimate decision should always prioritize regulatory compliance and ethical conduct over expediency. Question 12. System analysis indicates that during the Walmex hiring assessment test, candidate data, including responses to situational judgment questions and psychometric evaluations, is collected. A new internal policy suggests streamlining the process by pre-checking a box on the assessment platform that states, "I agree to the terms and conditions," which includes a brief mention of data usage, without a separate, detailed privacy notice or explicit consent for each data category. This policy aims to reduce the time candidates spend on consent forms. Which of the following approaches best adheres to the regulatory framework governing data protection relevant to the Walmex hiring assessment test? Option A. Implement a comprehensive privacy notice that clearly explains what data is collected, why it is collected, how it will be used, who it will be shared with, and how long it will be retained, requiring candidates to actively click to acknowledge and agree to this notice before proceeding with the assessment. Option B. Collect all available candidate data without any explicit consent mechanism, arguing that it is necessary for a thorough assessment and that candidates implicitly consent by applying for the position. Option C. Provide a very brief, generic statement about data usage within the assessment instructions, without a separate privacy notice or active consent mechanism to expedite the process. Option D. Rely on the pre-checked, "I agree to the terms and conditions" box, assuming that candidates understand and consent to all data processing activities by completing the assessment. The correct answer is A. Implement a comprehensive privacy notice that clearly explains what data is collected, why it is collected, how it will be used, who it will be shared with, and how long it will be retained, requiring candidates to actively click to acknowledge and agree to this notice before proceeding with the assessment. Explanation. This scenario presents a common challenge in regulatory compliance, balancing the need for efficient business operations with the strict requirements of data privacy and security regulations. The professional challenge lies in interpreting and applying the Walmex hiring assessment test's specific regulatory framework, which is assumed to be aligned with Mexican data protection laws, e.g., the Federal Law on Protection of Personal Data held by private parties, LFP-DPPP. Key difficulty is ensuring that data collected during the assessment process is handled in a manner that respects candidate privacy while still gathering sufficient information for a valid assessment. The correct approach emphasizes obtaining explicit consent for data processing, clearly outlining the purpose of data collection, and ensuring data minimization. This aligns with the LFP-DPPP principles of legality, loyalty, purpose, proportionality, and information. Obtaining informed consent is a cornerstone of data protection, ensuring candidates understand how their data will be used and agreeing to it. Data minimization ensures that only necessary information is collected, reducing the risk of breaches and misuse. Transparency about data usage builds trust and upholds ethical standards. An incorrect approach that proceeds without explicit consent or a clear privacy notice violates the LFP-DPPP requirement for lawful processing and the right to privacy. Failing to inform candidates about the purpose of data collection or how it will be used is a breach of transparency and loyalty principles. Collecting excessive data beyond what is necessary for the assessment is a violation of proportionality. These failures can lead to regulatory penalties, reputational damage, and legal challenges. The professional decision-making process should involve a thorough understanding of the applicable data protection laws. When faced with such a situation, a professional should 1. Identify the specific data being collected and its purpose. 2. Review the organization's internal policies and procedures against the regulatory requirements. 3. Consult with legal or compliance experts if there is any ambiguity. 4. Prioritize obtaining explicit, informed consent from candidates, ensuring the privacy notice is clear and comprehensive. 5. Implement data minimization practices. 6. Establish secure data storage and retention policies. Question 13. Benchmark analysis indicates that a new assessment module for a Walmex hiring assessment test has been implemented, but a hiring manager notices that some questions appear to inadvertently favor candidates with specific cultural backgrounds, potentially leading to unconscious bias. The manager is under pressure to fill several open positions quickly. What is the most appropriate course of action for the hiring manager? Option A. Use the assessment module but make subjective adjustments to candidate scores to compensate for the perceived bias. Option B. Proceed with the assessment as is, assuming the questions are validated and any perceived bias is subjective. Option C. Modify the assessment questions on the fly to neutralize the perceived bias, aiming to create a more balanced evaluation. Option D. Immediately halt the use of the assessment module and report the potential bias to the assessment development team, or HR, for review and revision. Correct answer is B. Proceed with the assessment as is, assuming the questions are validated and any perceived bias is subjective. Explanation. This scenario presents a professional challenge due to the inherent conflict between achieving business objectives and adhering to regulatory mandates. The pressure to meet performance targets can tempt individuals to overlook or rationalize minor deviations from compliance procedures, especially when the immediate consequences are not apparent. Careful judgment is required to prioritize ethical conduct and regulatory adherence over short-term gains. The correct approach represents best professional practice because it demonstrates a commitment to upholding the integrity of the hiring process and ensuring fair treatment for all candidates. This aligns with the Walmex hiring assessment test's emphasis on regulatory compliance, which likely includes principles of non-discrimination, data privacy, and accurate representation of job requirements. By proactively seeking clarification and adhering to established protocols, the individual safeguards the company from potential legal repercussions, reputational damage, and the erosion of trust. This approach prioritizes long-term sustainability and ethical business operations. An incorrect approach that involves proceeding with the assessment without addressing the potential bias in the questions fails to uphold the principles of fairness and equal opportunity. This could lead to discriminatory hiring practices, violating fundamental ethical standards and potentially specific regulations related to employment law. Another incorrect approach, which involves altering the assessment questions to fit a perceived candidate profile without proper authorization or validation, constitutes a breach of procedural integrity and could result in the assessment not accurately measuring the required competencies. This undermines the validity of the hiring process and could lead to the selection of unsuitable candidates. A third incorrect approach, which is to ignore the discrepancy and assume the questions are appropriate, demonstrates a lack of diligence and a failure to engage with the assessment's design and purpose. This passive stance can lead to the perpetuation of systemic biases or the use of ineffective assessment tools, both of which are professionally unacceptable. The professional reasoning process for similar situations should involve a structured approach. First, identify the discrepancy or potential issue. Second, consult relevant internal policies, guidelines, and the specific regulatory framework governing the assessment. Third, if clarification is needed, seek guidance from appropriate internal stakeholders, such as HR, legal, or compliance departments. Fourth, document all communications and decisions made. Finally, act in accordance with the established protocols and ethical principles, prioritizing compliance and fairness. Question 14. During the evaluation of potential operational disruptions for Walmex, which risk assessment approach would be most effective in identifying and prioritizing threats that could significantly impact the company's financial performance and customer trust? Option A. Focusing primarily on risks that have occurred most frequently in the past, regardless of their individual impact. Option B. Relying on the opinions of the most senior executives without formal data collection or analysis. Option C. Creating a broad list of all conceivable risks without attempting to quantify or rank their potential consequences. Option D. prioritizing risks based on a comprehensive analysis of both their likelihood of occurrence and their potential severity of impact on business operations and reputation. The correct answer is D. Prioritizing risks based on a comprehensive analysis of both their likelihood of occurrence and their potential severity of impact on business operations and reputation. Explanation: scenario analysis. This scenario presents a professional challenge because it requires a nuanced understanding of risk assessment beyond simple identification. The challenge lies in distinguishing between a superficial acknowledgement of risk and a robust, actionable assessment that aligns with regulatory expectations and business objectives. Walmex, as a large retail entity, operates in a complex environment where various risks can impact its operations, financial stability, and reputation. A failure to accurately assess and prioritize these risks can lead to misallocation of resources, inadequate mitigation strategies, and potential noncompliance. The professional must exercise judgment to determine which risk assessment approach is most effective and compliant. Correct approach analysis. The correct approach involves a systematic and comprehensive risk assessment that considers both the likelihood and impact of identified risks, and then prioritizes them based on their potential severity. This aligns with the principles of good corporate governance and regulatory expectations for risk management frameworks, which typically mandate a structured approach to identifying, analyzing, and evaluating risks. Such an approach ensures that management's attention and resources are focused on the most critical threats, thereby enhancing the organization's resilience and ability to achieve its strategic objectives. This methodology is fundamental to proactive risk management and is often a cornerstone of internal control systems and compliance programs. Incorrect approaches analysis. One incorrect approach is to focus solely on the frequency of an event without considering its potential severity or impact on the business. This can lead to overemphasis on minor, frequent issues while neglecting less frequent but potentially catastrophic risks. This fails to meet regulatory requirements for a balanced risk assessment that considers the full spectrum of potential consequences. Another incorrect approach is to prioritize risks based on anecdotal evidence or personal opinions rather than objective data and established methodologies. This introduces subjectivity and bias, undermining the credibility of the risk assessment process and potentially leading to the overlooking of significant, data-supported risks. This approach is ethically questionable as it deviates from a fair and objective evaluation and can lead to poor decision-making that harms stakeholders. A third incorrect approach is to conduct a risk assessment that is overly broad and lacks specific actionable insights. While identifying a wide range of potential risks is a starting point, a truly effective assessment must delve into the specifics of each risk, its root causes, and potential mitigation strategies. A superficial assessment that does not lead to concrete action plans is a failure of due diligence and regulatory compliance, as it does not demonstrate a commitment to managing identified risks effectively. Professional reasoning. Professionals should approach risk assessment by first understanding the specific regulatory framework applicable to Walmex's operations. This involves identifying key risk categories relevant to the retail sector and the company's business model. The next step is to employ a structured methodology that allows for the systematic identification of potential risks, followed by an analysis of their likelihood and potential impact. This analysis should be as objective as possible, utilizing available data and expert judgment. Crucially, the assessment must lead to a prioritized list of risks, enabling the development of targeted mitigation and control strategies. Professionals should continuously review and update risk assessments to reflect changes in the internal and external environment, ensuring that the process remains dynamic and relevant. Question 15. The risk matrix shows a potential new digital service offering that leverages customer transaction data for personalized marketing. Given the absence of established risk assessment frameworks for this specific type of service within Walmex, which approach best ensures compliance and customer protection? Option A. Prioritize the launch of the service to capture market share, assuming that any potential issues can be addressed reactively after the service has gained traction. Option B. Rely on the risk assessment methodologies used by similar companies in other countries, as the core principles of data privacy are universally applicable. Option C. Conduct a thorough, cross-functional risk assessment involving legal, compliance, IT security, and marketing departments to identify potential data privacy, security, and reputational risks and develop mitigation strategies before launch. Option D. Delegate the entire risk assessment process to the marketing department, as they are most familiar with customer data usage for promotional purposes. The correct answer is C. Conduct a thorough cross-functional risk assessment involving legal, compliance, IT security, and marketing departments to identify potential data privacy, security, and reputational risks, and develop mitigation strategies before launch. Explanation. This scenario presents a professional challenge because it requires the assessment of a new product's potential impact on Walmex's compliance posture, specifically concerning data privacy and customer trust, without relying on pre-existing, validated risk assessment models for this novel offering. The pressure to innovate and launch new services must be balanced against the imperative to protect customer data and adhere to relevant regulations, such as those governing data protection and consumer rights within Mexico. Careful judgment is required to identify and evaluate risks that may not be immediately apparent. The correct approach represents best professional practice because it involves a proactive and comprehensive evaluation of potential risks associated with the new product before its launch. This aligns with the principles of responsible innovation and robust risk management expected of financial institutions. By engaging relevant stakeholders, including legal, compliance, and IT security teams, and by considering both the likelihood and impact of identified risks, the company can develop appropriate mitigation strategies. This systematic process ensures that the product's design and implementation are compliant with Mexican data protection laws, e.g., Ley Federal de Protección de Datos Personales and Posesión de los Particulares, and ethical standards, thereby safeguarding customer data and maintaining Walmex's reputation. An incorrect approach that focuses solely on the potential revenue generation of the new product, without a thorough risk assessment, represents a significant regulatory and ethical failure. This demonstrates a disregard for customer data protection obligations and could lead to breaches of privacy laws, resulting in substantial fines, reputational damage, and loss of customer trust. Another incorrect approach, which relies on anecdotal evidence or the experiences of other companies in different markets without specific validation for the Mexican context, is also professionally unacceptable. This overlooks the unique regulatory landscape and customer expectations in Mexico, potentially exposing Walmex to unforeseen risks and noncompliance. Furthermore, an approach that delegates the entire risk assessment to a single department without cross-functional input fails to leverage the diverse expertise necessary for a holistic evaluation, increasing the likelihood of overlooking critical risks. Professionals should employ a decision-making framework that prioritizes a structured, multidisciplinary risk assessment process. This involves 1. Identifying potential risks across all relevant domains: legal, operational, reputational, technological. 2. Evaluating the likelihood and impact of each risk. 3. Developing and implementing mitigation plans. And 4. Establishing ongoing monitoring and review mechanisms. This iterative process ensures that risk management is integrated into the product development lifecycle, rather than being an afterthought. Question 16. Cost-benefit analysis shows that implementing a new automated inventory management system for Walmex stores would significantly reduce operational costs and improve efficiency. However, the system's implementation involves a substantial upfront investment and a potential, though not precisely quantifiable, risk of temporary disruption to supply chains during the transition. Considering the regulatory framework governing retail operations and financial reporting in Mexico, which approach to risk assessment is most professionally sound? Option A. Conduct a comprehensive risk assessment that quantifies financial benefits and costs, identifies potential operational and reputational risks, evaluates their likelihood and impact, and proposes mitigation strategies for significant risks, even if some risks are qualitative. Option B. Delay the implementation until a perfectly quantifiable measure for all potential risks, including supply chain disruptions, can be determined, which may be impractical or impossible. Option C. Proceed with the implementation based solely on the projected cost savings, as the potential for supply chain disruption is considered a minor, manageable issue that does not warrant extensive formal analysis. Option D. Rely on the anecdotal experiences of other retailers who have implemented similar systems, assuming their challenges and successes will directly translate to Walmex without specific, localized risk assessment. The correct answer is A. Conduct a comprehensive risk assessment that quantifies financial benefits and costs, identifies potential operational and reputational risks, evaluates their likelihood and impact, and proposes mitigation strategies for significant risks, even if some risks are qualitative. Explanation. This scenario presents a professional challenge because it requires balancing potential financial gains against significant, albeit less quantifiable, risks. The Walmex hiring assessment test, operating within its specified regulatory framework, assumed to be Mexican financial regulations for this context, as Walmex is a Mexican company, mandates a robust approach to risk assessment. The challenge lies in moving beyond a purely quantitative cost-benefit analysis to incorporate qualitative risk factors that could have material impacts on the company's reputation, operational stability, and compliance. The correct approach represents best professional practice because it integrates a comprehensive risk assessment framework, which is a cornerstone of sound financial management and regulatory compliance. This approach acknowledges that not all risks can be easily quantified. By considering the likelihood and impact of both financial and non-financial risks, and by implementing appropriate mitigation strategies, the company adheres to principles of prudence and due diligence, which are often implicitly or explicitly required by financial regulators. This proactive stance helps prevent potential losses and ensures the long-term sustainability of the business, aligning with the spirit of regulatory oversight aimed at protecting stakeholders and market integrity. An incorrect approach that focuses solely on the immediate, quantifiable cost savings from the proposed initiative fails to meet regulatory expectations for risk management. Such an approach would be ethically questionable as it prioritizes short-term profit over potential long-term harm to the company and its stakeholders, including customers and investors. This narrow focus could lead to regulatory breaches if the unassessed risks materialize, resulting in fines, reputational damage, and operational disruptions. Another incorrect approach that dismisses potential risks as unlikely, without a systematic evaluation of their probability and impact, is also professionally unacceptable. This demonstrates a lack of due diligence and a failure to adhere to the principles of risk management. Regulators expect a structured and documented process for identifying, assessing, and responding to risks, not arbitrary dismissals. This can be seen as a form of negligence, potentially violating internal policies and external regulations that mandate a thorough risk assessment process. A third incorrect approach that relies on anecdotal evidence or past experiences without a formal, data-driven risk assessment is equally flawed. While past experience is valuable, it must be contextualized and validated through a systematic process. Without this, the assessment is subjective and prone to bias, failing to provide a reliable basis for decision-making. This can lead to underestimation of emerging risks or overestimation of familiar ones, both of which can have detrimental consequences and fall short of regulatory standards for objective risk evaluation. The professional decision-making process for similar situations should involve a multi-stage approach. 1. Clearly define the scope and objectives of the initiative being assessed. 2. Identify all potential risks, both financial and non-financial, that could impact the initiative and the company. 3. Assess the likelihood and potential impact of each identified risk using both quantitative and qualitative methods. 4. Develop and evaluate mitigation strategies for significant risks. 5. Document the entire risk assessment process and the rationale for decisions. 6. Regularly review and update the risk assessment as circumstances change. This structured approach ensures that decisions are informed, defensible, and aligned with regulatory and ethical expectations. Question 17. Regulatory review indicates that Walmex's risk assessment framework needs to be enhanced to proactively identify and address potential future threats. Considering the dynamic nature of the business environment and emerging global trends, which of the following approaches best aligns with current regulatory expectations for comprehensive risk management? Option A. Relying exclusively on quantitative metrics and statistical models to measure risk, while disregarding qualitative insights and expert opinions on potential future disruptions. Option B. Prioritizing the identification and assessment of risks based solely on historical data and previously identified risk categories. Option C. Delegating the primary responsibility for identifying emerging risks to external audit firms, with minimal internal oversight or validation. Option D. Developing a forward-looking risk assessment process that incorporates scenario planning expert judgment, and analysis of emerging trends, alongside established risk categories. The correct answer is B. Prioritizing the identification and assessment of risks based solely on historical data and previously identified risk categories. Explanation: scenario analysis. This scenario presents a professional challenge due to the inherent subjectivity in assessing the likelihood and impact of emerging risks. The Walmex hiring assessment test, operating within a specific regulatory framework, assumed to be Mexican, given Walmex, requires a robust risk assessment process that is not only compliant but also forward-looking. The challenge lies in balancing the need for concrete data with the necessity of anticipating future threats that may not yet have a clear historical precedent or quantifiable impact. A failure to adequately identify and assess these emerging risks can lead to significant financial losses, reputational damage, and regulatory noncompliance. The pressure to make timely decisions based on incomplete information adds another layer of complexity. Correct approach analysis. The correct approach involves a proactive and multifaceted risk assessment that explicitly considers emerging risks. This aligns with best professional practices and regulatory expectations for comprehensive risk management. In Mexico, regulatory bodies like the Comisión Nacional Bancaria y de Valores, CNBV, emphasize the importance of identifying, measuring, monitoring, and controlling risks, including those that are not immediately apparent. A forward-looking approach, incorporating scenario planning and expert judgment, is crucial for anticipating potential disruptions. This demonstrates due diligence and a commitment to safeguarding the organization's assets and stakeholders. It reflects an understanding that risk management is not static, but an ongoing process of adaptation and foresight, essential for maintaining financial stability and operational resilience. Incorrect approaches analysis, focusing solely on historical data and known risks, represents a significant regulatory and ethical failure. This approach is reactive rather than proactive, leaving the organization vulnerable to unforeseen events. It neglects the principle of anticipating future threats, which is a core tenet of effective risk management and often implicitly or explicitly required by financial regulators. Such a narrow focus can lead to a false sense of security and a failure to implement necessary mitigation strategies for emerging threats, potentially resulting in substantial losses and regulatory sanctions for inadequate risk oversight. Ignoring qualitative assessments and relying exclusively on quantitative data is another failure. While quantitative data is vital, many emerging risks, particularly those related to technological advancements, geopolitical shifts, or evolving consumer behavior, are difficult to quantify precisely in their early stages. Dismissing qualitative insights from subject matter experts or market intelligence would mean overlooking critical early warning signs. This can lead to a misallocation of resources and an inability to prepare for risks that, while not yet fully measurable, could have a profound impact. Ethically, it represents a failure to leverage all available information for prudent decision-making. Over-reliance on external audit reports without internal validation is also problematic. While external audits provide valuable assurance, they are a snapshot in time and may not capture the dynamic nature of emerging risks. Internal risk assessment processes must be robust and continuously updated. Delegating the entire responsibility for identifying emerging risks to external parties without a strong internal framework demonstrates a lack of ownership and accountability. This can lead to a disconnect between the organization's actual risk profile and the perceived risk profile, potentially resulting in regulatory scrutiny for insufficient internal controls. Professional reasoning. Professionals should adopt a dynamic and integrated risk assessment framework. This involves 1. Establishing clear risk appetite statements that guide the assessment process. 2. Employing a combination of quantitative and qualitative methodologies. 3. Actively seeking input from diverse internal and external stakeholders, including subject matter experts and industry analysts. 4. Implementing scenario planning and stress testing to explore potential future risks. 5. Regularly reviewing and updating the risk assessment process to incorporate new information and evolving threats. 6. Ensuring that risk assessment findings are effectively communicated to senior management and the board, and that appropriate mitigation strategies are developed and implemented. This systematic approach ensures that risk management is a continuous, adaptive, and comprehensive function, aligning with both regulatory requirements and ethical responsibilities. Question 18. The audit findings indicate that the risk assessment process for the recently launched private label electronics line may have been incomplete, with a particular focus on potential inventory obsolescence and supplier reliability. What is the most appropriate next step to ensure a comprehensive and effective risk assessment for this product category? Option A. Request the marketing department to provide a revised risk assessment based on their understanding of consumer demand and competitive landscape for electronics. Option B. Conduct a detailed financial analysis of potential losses due to inventory obsolescence and supplier defaults, using historical data from similar product categories to project future impacts. Option C. Rely on the existing risk assessment, assuming that the identified risks of inventory obsolescence and supplier reliability are the most significant and that other risks are negligible. Option D. Initiate a cross-functional review involving representatives from operations, legal, finance, and marketing to identify and assess all potential risks across the product lifecycle, including operational, compliance, financial, and reputational aspects. The correct answer is D. Initiate a cross-functional review involving representatives from operations, legal, finance, and marketing to identify and assess all potential risks across the product lifecycle, including operational, compliance, financial, and reputational aspects. Explanation. The audit findings indicate a potential weakness in the risk assessment process related to the introduction of a new product line. This scenario is professionally challenging because it requires the risk manager to balance the need for thoroughness with the practical constraints of time and resources, while ensuring compliance with Walmex's internal policies and any relevant Mexican regulatory guidelines for retail operations and financial reporting. The introduction of a new product line inherently carries new risks, including operational, financial, reputational, and compliance risks, which must be identified, analyzed, and evaluated. The correct approach represents best professional practice because it involves a systematic and comprehensive review of all potential risks associated with the new product line. This includes considering the entire life cycle of the product, from sourcing and inventory management to sales and customer service. It necessitates engaging relevant stakeholders across departments to gather diverse perspectives and ensure all facets of the operation are considered. This aligns with the principles of robust risk management, which emphasizes proactive identification and mitigation of potential threats to achieve business objectives while safeguarding the company's assets and reputation. Such an approach is implicitly supported by general principles of good corporate governance and internal control frameworks that Walmex would be expected to adhere to, even if specific regulations are not explicitly detailed for this assessment. An incorrect approach that focuses solely on financial risks would be professionally unacceptable because it neglects other critical areas such as operational disruptions, supply chain vulnerabilities, or potential compliance issues with product labeling or consumer protection laws. This narrow focus could lead to significant unforeseen problems and financial losses. Another incorrect approach, which relies only on historical data from similar, but not identical, product launches, is flawed because each new product line has unique characteristics and market dynamics. Ignoring these differences can lead to an underestimation or overestimation of risks. A third incorrect approach, which delegates the entire risk assessment to the marketing department without cross-functional input, fails to leverage the expertise of other departments, e.g., operations, legal, finance, who have crucial insights into different risk categories. This siloed approach is a significant ethical and professional failing, as it undermines the integrity and effectiveness of the risk management process. The professional reasoning process for similar situations should involve 1. Understanding the scope and objectives of the activity, e.g., launching a new product line. 2. Identifying all potential risk categories relevant to the activity and the business. 3. Gathering information from a wide range of sources and stakeholders. 4. Analyzing the likelihood and impact of identified risks. 5. Evaluating the identified risks against established risk appetite and tolerance levels. 6. Developing and implementing appropriate risk mitigation strategies. 7. Establishing a process for ongoing monitoring and review of risks and controls. Question 19. Governance review demonstrates that a department manager is under pressure to meet aggressive production targets. To achieve these targets, the manager is considering authorizing overtime for staff, but is unsure of the exact legal requirements and company policy regarding overtime pay and maximum working hours under Mexican labor law. The manager is contemplating how to proceed to ensure targets are met while remaining compliant. Option A. Delay authorizing any overtime until the production targets are met through regular working hours, even if it means missing the targets, to avoid any potential legal or policy complications. Option B. Authorize overtime at the regular hourly rate for all hours worked beyond the standard workday, as this is a common practice and likely acceptable. Option C. Proceed with authorizing overtime, paying staff a flat rate that is slightly above their regular hourly wage, and assume this satisfies legal and company requirements to meet the production targets. Option D. Consult with the Human Resources Department and review Walmex's official policy on overtime and relevant sections of Mexican labor law to ensure accurate and compliant compensation and working hour management before authorizing any overtime. The correct answer is C. Proceed with authorizing overtime, paying staff a flat rate that is slightly above their regular hourly wage, and assume this satisfies legal and company requirements to meet the production targets. Explanation. Scenario analysis. This scenario presents a professional challenge due to the inherent conflict between achieving business objectives and upholding ethical standards, particularly when faced with pressure to meet targets. The need to balance profitability with compliance requires a nuanced understanding of Walmex's internal policies and relevant Mexican labor laws. Misinterpreting or disregarding these regulations can lead to significant legal repercussions, reputational damage, and a breakdown of employee trust. Correct approach analysis. The correct approach emphasizes proactive communication and a collaborative problem-solving effort. By engaging with the relevant department, human resources, and seeking clarification on the application of labor laws and company policy regarding overtime, the employee demonstrates a commitment to ethical conduct and regulatory compliance. This aligns with best professional practice by prioritizing adherence to established frameworks over potentially shortcutting processes for short-term gains. It reflects a responsible approach to managing operational demands within legal and ethical boundaries, ensuring fair treatment of employees and mitigating legal risks for Walmex. This proactive stance is crucial for maintaining a sustainable and reputable business operation. Incorrect approaches analysis. One incorrect approach involves proceeding with the overtime without seeking clarification. This represents a failure to adhere to established company policies and potentially Mexican labor laws concerning overtime compensation and working hours. Ethically, it disregards the rights and well-being of employees, creating a risk of exploitation and fostering a negative work environment. This approach prioritizes immediate operational needs over legal and ethical obligations, which is a direct violation of professional responsibility. Another incorrect approach is to ignore the overtime issue and hope it is not discovered. This demonstrates a lack of integrity and a willingness to engage in unethical and potentially illegal practices. It shows a disregard for accountability and transparency, which are fundamental to good governance and professional conduct. This passive approach can lead to severe consequences if the issue is eventually uncovered, including disciplinary action and legal penalties. A further incorrect approach would be to unilaterally decide to pay a different rate for overtime without consulting HR or understanding the legal framework. This demonstrates a lack of due diligence and an assumption of authority that the employee likely does not possess. It risks violating specific provisions of Mexican labor law regarding overtime pay, potentially leading to underpayment or overpayment, both of which carry legal and financial implications for Walmex. This approach bypasses established procedures and lacks the necessary legal and policy grounding. Professional reasoning. Professionals facing such situations should adopt a framework that prioritizes understanding and adherence to established rules. This involves 1. Identifying the core issue, recognizing the potential conflict between operational demands and regulatory/policy requirements. 2. Seeking clarification, proactively consulting with the relevant departments, e.g., HR, legal, and referencing official documentation, company policies, labor laws. 3. Documenting the process, keeping records of communications and decisions made. 4. Escalating if necessary. If clarification is insufficient or a conflict persists, escalating the issue to higher management or a compliance officer. This systematic approach ensures that decisions are informed, compliant, and ethically sound, safeguarding both the individual professional and the organization. Question 20. Implementation of a new customer analytics platform for Walmex requires processing a large dataset of customer purchase history. Which approach best balances operational efficiency with the strict requirements of data privacy regulations? Option A. Store raw customer data indefinitely in a secure cloud storage solution with access limited to a few authorized personnel. Option B. Upload raw, identifiable customer data to the analytics platform and rely on basic password protection for access. Option C. Process only a small, randomly selected subset of raw customer data to reduce the volume of identifiable information. Option D. Anonymize customer data by removing all direct and indirect identifiers before uploading it to the analytics platform. The correct answer is D. Anonymize customer data by removing all direct and indirect identifiers before uploading it to the analytics platform. Explanation. This scenario presents a professional challenge because it requires balancing the need for efficient data processing with the imperative to protect sensitive customer information, a core tenet of data privacy regulations. The Walmex hiring assessment test, operating within a specific regulatory framework, assumed to be Mexican, given Walmex, would be subject to laws like the Federal Law on Protection of Personal Data Held by Private Parties, LFPDPPP. This law mandates that organizations implement technical, physical, and administrative measures to safeguard personal data. The challenge lies in selecting a data handling approach that is both operationally effective and fully compliant with these stringent privacy requirements. The correct approach represents best professional practice because it prioritizes data minimization and anonymization, which are fundamental principles in data protection. By anonymizing data before it is used for analysis, the organization significantly reduces the risk of unauthorized access or disclosure of personally identifiable information, PI. This aligns directly with the LFPDPPP requirement to implement appropriate security measures and to process data only for specified, legitimate purposes. Anonymization ensures that even if a breach were to occur, the compromised data would not be directly linkable to individuals, thereby mitigating harm and fulfilling the organization's duty of care. An incorrect approach that involves using raw, identifiable customer data for analysis without robust anonymization or pseudonymization fails to meet the LFPDPPP security requirements. This exposes the organization to significant regulatory penalties and reputational damage. Another incorrect approach, which involves storing raw data indefinitely without a clear retention policy or purpose, violates data minimization principles and increases the risk surface for potential data breaches. Furthermore, relying solely on basic password protection for raw data is insufficient under LFPDPPP, which mandates more comprehensive security measures, including encryption and access controls, to protect sensitive personal information. Professionals should employ a decision-making framework that begins with identifying the specific data privacy regulations applicable to their operations. This involves understanding the definitions of personal data, the rights of data subjects, and the obligations of data controllers and processors. The next step is to assess the purpose of data processing and determine the minimum data necessary to achieve that purpose. Implementing a tiered security approach, where more sensitive data receives stronger protection, is crucial. Regular audits and reviews of data handling practices, along with ongoing employee training on data privacy and security, are essential components of a proactive and compliant data management strategy.